afternoon, traders. It's TK or ReadySetFutures.com. This is the 17th of October 2016, and this is your daily market wrap-up for today, the 17th of October. We've got a few headlines for you. We're going to look at copper, gold, crude, and the ES. Copper on the day is continuing to sell lower as we expected. Gold, as also expected, hacking around our 70% retracement of $1,256. Crude, big story on the day, trading back below $50 a barrel before catching a lift on the Globex Open. And then the ES, quieting down after a big week last week from volatility. Why don't we get right into it, traders? I want to give a big thank you to any of our new subscribers and for all you guys that are sharing this information. I'm glad you find value, and I'm glad that you find others that may have similar need for this type of information. First up on your screen is copper. It's our hourly chart of copper. We start here every day at the daily market wrap-up. On your chart, you can see two volume profiles, one back from July, the most recent here from early September. Today's action, you can see this was Friday's move in copper. Big down day after the Chinese GDP disappointed. We are looking for copper to move back into this high volume node. We're almost there. You can see here 209.70 down to 208.90. Take a listen to our weekly review. It's in the card. Feel free to click on it. Give you a little bit more background on what we're expecting here in copper, but not disappointing for what we're expecting. Copper's continuing to trade lower. Most importantly, now we're outside of the two value areas, both of this longer-term volume profile as well as the shorter-term volume profile. The longer we trade down here, the more acceptance we gain, and the better it portends for continued action lower. So copper is shaping up as expected today. Why don't we head over to gold? Gold's the other story. Well, it is a story because it's as expected. Let me see. We have the hourly chart up on gold. I'm going to break it back out to the 4-hour chart just so you guys can get some context here of what we've been seeing. The longer-term profile, the longer-term volume profile here on the chart is actually from Brexit. The volume that's building in that longer-term profile is actually a result of the profile here beginning last week, or 2 weeks ago, at the beginning of October, when gold sold off, broke below this, this wedge or pennant or whatever you want to call it. And it's continuing to gain acceptance down here at our 70% retracement level. You can see it's beginning to trade a bit lower than that, but only by $1 or $2, so we're not too concerned. We're going to break it back here in a really short period of time. This is our 5-minute chart, and here's our volume point of control at 1256.80, and our 70% retracement here was 1256.40, so quite close. Here was the big bar down, or at least that big kind of needle bar down last week that would kind of caught our attention, and we continued to trade back into the volume point of control off of the lower value area boundary. Zooming a bit further back out to that hourly so that we again can maintain some perspective here. We have a value area boundary, a value region of 1270.5 down to 1252, and a volume point of control of 1256.9. As I said, gold will continue to build here until it's built enough acceptance and enough consolidation before we can move higher. Take a look at the weekly review and our commitment to trader analysis on the gold market. You can tell our commercial interests are beginning to accumulate. They're beginning to accumulate slightly more quickly now that we're down here. At our expected point. There's wood to chop though ahead of us. 1265 at that developing volume weighted average price, and then again at the upper value area boundary. So. Will it be a quick move up as it was down? Likely not. But who knows if there's some type of kind of existential catalyst that launches the value of gold higher, or alternatively, the value of the dollar lower. And also, to kind of add credence to this, again on our on our weekly review, take a look at the dollar analysis. There was some fairly significant moves in positioning for not only the dealers, but also our levered money interests. And so they tend to move in opposite direction. They tend to kind of sell into each other and buy into each other. So take a look at that. That also gives us a bit of perspective on where the dollar's trading, and then, as a consequence, where gold might go. So that's gold's action on the day. Nothing unexpected, but really nothing to also write home about. Crude, heading over to crude oil. Crude traded below $50 today. Crude lost $50 again on the day. You can begin to see there's a bit of a downward sloping channel here on the chart. If I can be so bold and draw that in, we'll see what happens. There was an article in Zero Hedge that I'm going to pull up here, and here's that article from Zero Hedge, guys. Iran disagrees with OPEC production estimates as hedge fund oil longs hit 2-year high. It's quite the headline, and if you've been listening to us over the past few weeks, as the OPEC cartel has indicated they have an agreement to agree. Well, it appears that this agreement to agree is disintegrating fast. Iraq was really the first country to balk at OPEC's estimates of their production, and it appears Iran also, a fairly new player on the stage right after the U.S. has lifted sanctions on their production, now balking as well at the volume of oil that they're scheduled to produce, not an agreement. And then the other part here, and Zero Hedge does a really great job, and I'm not taking credit for this at all. I just want you guys to take a peek and just take a look, so that what we do on our weekly review, looking at commitment to trader data, is not some silly indicator. You have here this chart here, money managers long and short position in WTI futures and option contracts. It's a similar look to what we put up on our weekly review. Take a look at this. It's actually a really good article, and it just kind of gives some credence to what we've been saying for the past few weeks here. So I'm going to take that out of the way, get back to the crude oil market. You see here, this is actually the Globex Open. I haven't gotten in this big bar right here, right at the Globex Open. I don't know what that is, but yeah, it could be some news out there I haven't quite got into. But today's action, you see quite the sell-off down below $50, hacking around the volume point of control, this green line at 49.80, and then beginning to move higher. But as you see, we did draw that trend line on the chart. We'll leave it there and see if it holds. Heading lastly over to the ES traders. Again, this is our 5-minute chart. I'm going to move it back to the hourly because I like that view better. We have a couple of volume profiles on the chart, and I guess we can't see them, so we're going to go down to the 4-hour. Here is the 4-hour chart, and you can see our 2 volume profiles. The one on the left, the further one out, is Brexit. The more near volume profile is since Chair Yellen's hawkish hold at the end of September. You see this fairly thick green line is coincident between the two of them at around 21.53. We've been talking about that for weeks. That is the volume point of control for both of these volume profiles. And the red dotted lines are our volume, developing volume weighted average prices for each volume profile respectively. I have a short on the board up here at 21.41. In our weekly review, I tell you guys why I didn't have it on last week, primarily because I was traveling and didn't have access to the right level of data. But regardless, still have one up here at 21.41, and you see the volume weighted average price from our hawkish hold profile beginning to converge with that of the post-Brexit action. Trade is beginning to gain acceptance below these outside of the value area boundary, and as it does that, it'll be more and more difficult for it to trade back up. Sans news, right? Who knows what kind of news is out there on the horizon that could potentially impact the price of these markets. So That's what we got for you today, traders. It's your daily market wrap up. We are going to try and keep these things under 10 minutes. So I want to encourage you guys to like the video. If you like the content, please feel free to subscribe. I'd appreciate it. I'd appreciate sharing this. If you feel that the value, the information here is of value not only to yourself, but maybe some of the other guys you know who are trading or gals that are trading, by all means, go ahead and share this information. There's nothing proprietary about it. I'm sharing with you my view of the market and what I use to trade on a regular basis. So I'm doing the work anyway, and it's something I'm doing that I thought I might share. So guys, with that's it. I'm TK. This is ReadySetFutures. As always, it's your money, it's your account, and I will see you tomorrow for another terrific daily market wrap-up.